for more and other topical issues within the market, firstly, when we're reviewing the month of February, and then what to look out for the month of March, let's bring in Ebube Uneze, Forex dealer with Access Bank, to give us an insight into what happened last week throughout the FX market, the fixed income market, as well as what to expect. Thank you for joining us, Ebube.
Thank you very much, Aniete, for having me. It was a pleasure to be with you on the call.
Okay. Okay, so now, just give us just in a very short, concise information about review the fixed income market and the Forex market. Yes, we saw that the Naira has been stable. It recorded its highest level of stability against the dollar. But give us an overview of the market. We know it has dropped all the way from $40.92 billion to about 38 or thereabout billion dollars. So give us details about this and other fixed income markets instruments.
All right. Thank you, Aniete, for having me. So as you rightly mentioned, last month, in the month of February, we witnessed a prolonged period of stability in the FX market. We saw exchange rates range between 1490 and 1520 during the course of last month. This stability in the FX market is largely attributed to, I can refer to two policies of the central bank. One is the extension of the access to the foreign exchange market for BDCs. So we saw BDCs having access to the foreign exchange market, and the CBN also capping their sell rates to 1% of their buying rate. So what this did was it began to moderate rates in the alternative market. Another factor we saw responsible for the stability we witnessed last month was the rather surprising move by the central bank to hold the monetary policy rate at 27.5%. So this was a signal well received by the foreign portfolio investors, who took advantage of this to also come into the market to supply the market with liquidity. So all in all, we had a very an improved liquidity. In terms of liquidity, average liquidity for last month was about $445 million. Total turnover for last month at $8.9 billion. The average rates in the foreign exchange market was at 1,500 Naira to a dollar. So all in all, it was a pretty good month in the foreign exchange market. On the other hand, on the fixed income market, as I had earlier mentioned, we saw improved foreign portfolio investor participation in the local fixed income market. So it was a bullish market both on the treasury bills market and the bonds market. Last month, we saw the Debt Management Office conduct two auctions where they raised a total of, in the first auction, they raised a total of 670 billion with stop rates declining from the previous auction level.
Okay. Yeah, we're sorry to cut you because we wouldn't have. I know you want to give us more details, but we've seen that it was quite an impressive performance across the fixed income market as well as the Forex market. But now, looking into March, I know that first we're expecting that inflows of about 1.15 trillion naira is expected into the market. Today, the bonds, the FGN savings bond, as well as NCB primary market auction of about 650 billion naira worth of maturities. Now, can you tell us how is all this going to shape the fixed income market for the month of March?
Okay, thank you, Anette. So the general expectation is that it's going to be a liquid month. As I rightly mentioned, there's about the 1.53 trillion coming into the market. There's a bond maturing during the course of the month. And we also expect that from the DMO calendar on the treasury bill space, they are looking to borrow less than the maturities that are maturing within this month. So we have a net credit of about 700 billion coming from treasury bill maturities. Then we also have a bond coupon that about 549 billion coming to the system. So all in all, we expect a liquid month. As such, the general expectation is that we'll continue to see the downward trend in yields in the fixed income market.
Okay, so but what does that also tell us about government borrowing? Is the government still intensifying its borrowing? If you look at the bonds calendar for the first quarter, which first quarter will be ending sometime this month. So what does that tell us about government's borrowing plan?
Okay, thank you for that. So generally, one can estimate that what the government is doing is to take advantage of the bullish market to raise as much as they can. But we are seeing a slight reallocation from the short term to the long term. So we are seeing them borrowing more on the bond side than they are doing on the treasury bill side, and I think this is taking advantage of the demand that is coming to those auctions, and also to the cost management strategy as well. So the government is still borrowing, but within this first quarter, we are seeing them borrowing less than the instruments that are maturing.
Okay, Bube, I think we'll leave it there. Of course, we're very, very much satisfied and looking forward to how the market, the month of March, starts out. Well, not the ending, because the ending is far away. But thank you so much for your analysis on the show.
Thank you.